Hi, this is Randy Finney with Right Side of the Chart, and this is a mid to latest session update for Wednesday, May 2nd, 2024. It's 2:38 Eastern Time as I'm starting the video. I'm going to go over, in this one, I'm going to try to get it updates on as many of the recently highlighted trade ideas I've thrown out, and that is a whole compilation. We're sticking mainly with equities here, mainly, but a couple other things we'll talk on. But both ETFs, including the index ETFs, sector ETFs, as well as individual stocks. It's a lot, so I'm going to dive right in there. There's going to be some long trade ideas and updates, talk on the hedges that we've thrown out there, and pretty much the takeaway is a lot of these, those that are short trades have bounced back to resistance levels that provide an objective entry. If my read on the market is correct where we're going, Apple, whether it's tomorrow, or next week, is probably going to continue lower and then take the market down with it. Otherwise, we're at again, we're back bouncing back to resistance levels in both the indexes. We get a little room here on QQQ, but on quite a few of these trade ideas, that's why I wanted to get it out to you. And I'm going to say this. There are some longs in here for those of you who are bullish. Even some of the short trade ideas that I'm highlighting in this video with support levels or resistance levels overhead, which we've bounced into, those are levels that those bullish can take. You either wait for a breakout above resistance or you buy a pullback to support. So you can look at it two ways, glass half full, glass half empty. And so I think there's something in here for everybody. And let me just dive into the chart. So QQQ, this is a 60-minute chart. Has a little bit of room. Remember, this was the big, to me, the big level here, the bottom of the trading range at 433, which was broken. We hit T2, bounced as expected off T2, rallied all the way up back into the 433 level. Support, once broken, becomes resistance, and that's where we're at. So we have all the makings of a little near-term uptrend here. Is it a counter-trend bounce? That's going to see us go down more. In other words, was this the counter trend bounce and we continue down to T3 and T4 as I still favor or not? We'll probably know after Apple. Again, not tonight. I don't care where Apple goes tonight. It's where it goes really in the coming sessions. So, maybe Friday we'll have some visibility if it's a big move one way or the other. Otherwise, in other words, clearly takes QQQ back up in here or clearly takes it down below T2. Those are kind of the big levels I'm watching near term. 433. Ideally, not absolutely necessarily, but ideally you want to see the Qs remain below that level if you are short. And you want to see T2, I'm sorry, the recent lows get taken out. And likewise, if you're bullish, you want to see all the opposite of that happen. This is a different board here. This is the board I've been, another board. So it's the same 433 level. And on the next trade I want to update is at TLT long. Again, I already covered in the earlier video how crude was mentioned as a short a couple weeks back to hedge against a short position on the Qs or the small caps. Either way, it's a paired trade. I'll get to both in a second. But and like I say, I like those indirect hedges because they're based on the technicals of each thing as well as their correlation or what should be a correlation but doesn't always. In other words, usually when crude goes up, the market, especially when the market's hyper-focused on inflation, it'll put pressure on the markets, as it did. This whole thing, was caused by crude rallying, and then recently crude started to correct, and so make no mistake about it, it's not mere coincidence. We had the bounce in QQQ, so like I said earlier, if you would have rode that bounce out without even gaming it off T2, which was suggested on the site, then you would have more than profited on the crude short. Now, so I want to talk about hedges too. So right here was so far perfect timing throughout this post here. This was just last week on the 25th. We had ZB or TLT. ZB is the 30-year Treasury bond. TLT's, I'm sorry, let me speak a little slower. ZB are the 30-year or is the 30-year Treasury bond futures. TLT tracks the 30-year Treasury bond, 20 to 30-year bonds in there. Offers an objective long entry here down to or down to the 112 and or down to the 112 support. It's either a pure play long or an indirect hedged equity short positions. Published that at 10 a.m. right there, 10:01 a.m. And the low, the price was 120.80. So far, just a perfect reversal off that level. That was the low right there, and nothing huge so far. But we are up, and so that was we're up 2%, and you can see we're at resistance. So TLT breaks out, it's probably going to run. I'm still holding that one as an indirect hedge. Remember, it's suggested with Treasury bonds due to their inherently low volatility, at least a double position size if you're trying to offset a equity short position on the market. So I'm going to add I'll just draw it in here. There's a little minor support right there, but either way, so 2% gain right off the lows. And if you look at that QQQ, this is where it was thrown out. That is where my crosshairs are. That's the 10 p.m. candle on the 25th. So exactly when we went long to hedge QQQ short. Again, if you didn't game any of the bounce, if you just wrote it out, being short, you had a 3.7% rally. But again, in TLT, you had I didn't mark that low. Let me do it here. I'll do TLT. CB is the one I was trading. We nailed the low right there. That was it, that candle here. And that was so far a 2% rally times 2. Remember, a double weighted position. So that's a 4% rally, more than offsetting the gain in QQQ. So you're profitable all along and then some. In other words, you made more when QQQ bounced, and that was the back test right there of QQQ. So I just wanted to, talk about again how advantageous indirect hedging can work. And there's a great example of it. So where are we at now? We're kind of in what I call technical no man's land, which is between support. Again, my big level that was T2 when T2 was hit right there, the recent lows, and then 433. That was the key breakdown level. So that's where we stand. And this is somewhat of a crapshoot because, as I said, I highly suspect Apple will either make or break this short trade that we're in right now. And all right, so now let's we'll go on to the indexes. So QQQ, that's what it looks like on the daily. Squished here, T1 hit, T2 hit, bounce back there. And so nothing's changed in the technical posture. I still maintain more downside. You look at things such as, among other things, the PPO here. This is the percentage price oscillator, close cousin to the MACD. And like so many on so many securities, you can look at it, and it's either the zero line or on or around the zero line, delineates bullish and bearish trends. So in other words, you want to see the signal line, the 90 MA cross. That's the signal line here. It was down there, it was below it, it was bearish. And you can go back as far as you want and see that defines the major trends. When you're above it, there was a bullish crossover, you remained above it all here, and you had that. Then you cross down below right here, and you had that. And then you cross back up here, and then you had that, right? So easy stuff, and then we're below it. So despite today's rally, which I think is just reflexive, these are the things that keep me leaning towards more downside to these targets I'm looking at. This 200-day moving averages, that T4 area being hit. That's the QQQ update. IWM, small caps, kind of a sister trade, if you will, betting on higher rates. And to the rate sensitive small caps, covered it many times. And we had the bearish rising wedge, negative divergence, rally into resistance. That was long-term resistance breakdown back test. And then most recently, we hit the 200-day moving average. That's this red line here, the exponential. We bounced, the small caps bounced, but they've been being capped out here at that major important resistance level. I have about 199.70, if you want, you can call it 200. And so a little area of consolidation, which again, if we pop up, that's bullish, but we're still well off the highs. And if we take out the 200s, we're probably going a lot lower based on the scope of the divergences. That's what I favor. Though I'm a little less with the the near term upside potential in treasuries. Remember, if treasuries rally, that means rates are going down and could give a little relief here to the small caps. But for now, I'm sticking with the longer term picture. IWP. I was doing a video recently, the last couple of weeks, and I had a price alert. This is the mid cap growth section, so it kind of gives you a broader view of the market. I tend to just jump from the large cap down to the small caps. Mid caps make up a bigger part of the market, and as the name implies, you have the Russell Mid Cap Growth Index. I think it's the Russell. Gosh, I'm trying to remember now. 400. Either way, this is the growth section. So within the stock market, like the S&P 500 is the S&P 500, has value and growth stocks in there. They also have a S&P growth index and a value index. The name implies growth companies do better in a strong growth environment when the economy is strong and growing. Value stocks tend to do better when it's kind of more of a risk-off market, and people are then looking, instead of chasing the high-flying growth stocks, they're buying value. I'm going to definitely put a level right there, 105.32, which I should have had on there, and there was a reaction. But when you look at this, that's a big bearish rising wedge pattern, breakdown, back test, been stair-stepping lower. Nothing goes straight down forever. We've had one of the biggest corrections in months, and bounced back to close to resistance, and so this one needs to take it out, and also coming down, I think, to the 200-day moving averages. So just wanted to give an update. Oh, and the update is a lot of these, I highlighted them back here recently when we broke. I think I highlighted this one on the break of that 110.45 support. I had a price alert set there. Went on down, hit what you can see. There was reactions there, bounced. And again, nothing goes down forever. Even corrective waves, if that's all this is, if it's not a primary trend, are typically ABCs. So that could be a corrective wave if you're longer term bullish. Stepping in to buy there if we get down there. All right, we're going to keep moving fast. Got a lot to cover here. Let's start looking at some sectors that I've highlighted recently as short ideas. And remember, going back a couple months ago, I was on a near daily basis highlighting the top sectors of the S&P 500. There's 11 sectors total, primary sectors. And the top 4 or 5, I wanted to see the majority of those break down. All of them have. XLK is the highest top weighted sector. Here, we'll look at that since I mentioned it. And same thing. It looks like QQQ, almost a mirror image. There was the same trading range. There was our breakdown. Also took out the 50-day moving average at the same time. Came back and back tested. The 50s are big levels. You can see it. I think you can see it. If you can't, here you go. Yellow line, 50-day moving averages delineate near-term bull and bear trends. Traders will step in and buy pullbacks to the 50, but once you break it, just like it acts as support from above in a bull trend, it will act as resistance when tested from below in a bear trend. And you can see, again, lots of trades. And here's where we started cracking through it. And so that's that. So that is the most important sector. Has over a quarter of the weighting of the S&P 500. Remember, there's 11 sectors. This one sector alone accounts for 1/4 of the gains. So that's a big one. Clearly on a sell signals, in my opinion, still headed to the 200 days. And actually all the way down here, it's going to probably undercut them and then bounce back to them. 181.61 is my target. XLV Healthcare long since breakdown, and then it broke my purple trading range there. I couldn't ask for better sell signals, so that's it. So again, nothing goes down forever. Went down, we got oversold, came close to the 200 days. The dip buyers are going to do what they do. When Pavlov rings his bell, the dogs come running. That's going to happen until you get entrenched in the wave 3 of the next leg down in the bear market. That's the primary P3, primary trends. If you're an Elliott waiver, corrective waves, as I said, are often ABC corrections, but primary waves are 5 with 1 down, 2 up, 3 down being the most powerful of all, then 4 up, and then the final 5th wave down. And so, again, if that's what this is, in the bigger picture, you'd have to look at the weekly chart, but you could also set the wave count on the daily. So anyway, that's what that is. Breakdown there. XLF, I wanted to highlight because I highlighted this one as an objective short trade. JP Morgan, I had actually another one I think I called down for earnings, and it certainly went down. JP Morgan being the 800-pound gorilla in the sector, biggest bank by far without a close second. This is XLF, the financial sector, but again, a beautiful uptrend line, bearish rising wedge, divergent high, bearish engulfing candle at the high. You can't ask for anything better than that. And so far it's going down, and it had a counter trend rally and it stopped cold right at the downtrend line I gave you before there, and it's been holding down below there. So where do we go from here? Well, it's not the end of the world, but it would certainly be a net bullish event to pop above the trend line and then to pop above that previous high. So if that starts to happen, then, it just kind of muddles up the bearish picture. That's all I can say. But that hasn't happened yet. What I can tell you definitively is this one has been getting rejected. It's still below resistance, and you can short it here anywhere at the trend line, or on a break below that recent low. And then you might want to cover, like I said, if you pop the trend line, I would give it a little room, let it at least pop that previous high. It's so close. But what I'm doing is showing both trade ideas and just the kind of overall view on the sectors. XLY, consumer discretionary, also breakdown, back test, rolled over, took out the downtrend line and testing above it. However, if you turn off all the lines, it's still below these reaction highs. If you look at it this way, again, you can see a little island candle there, right there, island top, one leg down, one wave down, and maybe more to come. XLI Industrials, that one. Also tried to get up above the trend line, so far rejected. Had one day that got above it barely, and then right back smack down below. And you can see right now you've got some nice support there. That brings me in. Industrials is of course Caterpillar. That's the one that I called down in front of earnings based on the technical posture. It already broken down below the uptrend line. We were right here right before they reported, and this one got smacked down. Dip buyers do what they did. They, it hit my target, my first target, 333. They bought it, and then they rallied it back to the 50 where it got rejected, and we're back down, about to give up the ghost if it takes out the recent lows. And that one's also headed probably down to the 200-day moving averages. So that's most of the sectors. Yeah, that's enough. We can XLC communications also on a sell signal, but holding above that 78 yellow support line. Another sector I've highlighted recently was XRT, retail stocks. Retail stocks, just summarize, I've highlighted this big, giant trading range here. They're very much in a bear market, like many other sectors and the majority of stocks out there, peaking back in 2021, not even close to highs. It's just kind of a Mag 7 thing, with some exceptions, of course. And in this trading range, had a breakout, which I predicted would fail because we had negative divergence, beautiful divergence, and overbought conditions, and the breakout. And we had a bearish rising wedge on a scale 1 to 10. This was a 10 for a short. You had the failed breakout. You could have anticipated and took it. You could have took the break of the bearish rising wedge right there. Either way, nothing big, but we hit our first target, and we did exactly what usually happens. And we had a reaction on the first target, and that's all this is. And this kind of contributed to the bounce we've had in the market in the last few days. Now, the million-dollar question, is it over? Is that all we're going to get? It could be. That's about the measured target of the wedge, the widest part. Maybe that's it. All I can tell you is let's see where Apple takes the market over the next week or so. And of course, if XRT takes out the recent lows, I suspect it will. I said before it even happened that it would probably fail, and that I went so far as to say when it fails and you have a false breakout above a trading range, usually your next stop, minor zigs and zags aside, is the bottom of the range. So I'm still maintaining T4, move down all the way to the bottom of the range, and then quite possibly down through it if and when we get there. So there's your update on XRT. MDY, I already covered the mid-cap growth, but there's MDY, the regular mid-cap sector, S&P mid-cap ETF right here that has value and growth. And again, same thing, beautiful bearish rising wedge, breakdown, very impulsive selling, and right back to resistance. I had this support at 531.55 right there, and we rallied back to it. And look at this, 1, 2, 3, 4, 5, 6, 7, 8. For almost 2 weeks now, 8 trading sessions, we've been back testing that level, unable to get through it. And look, again, guys, it was support before. Support once broken becomes resistance. That would be net bullish if it can pop that and hold above there. You're still off the highs, but ideally, I'm pointing this out because this is an objective short entry right now. If you want to, add some short exposure in front of Apple. Most people don't want to short on a day like this. I've done this long enough to know I always get the comments after the markets drop, in position, we're short. I tend to short on up days when everyone wants to buy, and I tend to cover on down days or after a series of down days when we're at support and everybody wants to short then. And I'm doing the opposite. I'm just pointing out objectively. I can't promise which way we're going to go after Apple, but I can promise it's objective to short resistance with a stop somewhat above. Somewhat will be relative to your price target or targets. That's MD, one of the mid caps. I already covered retail. I have XHB. Home builders was a short trade idea. This is the home builders ETF. We had a beautiful little, again, I know I use that term. Charts to me are like artwork to a art lover, and these charts. This was clean. It was a clean uptrend line, clean break. We danced on this support for a while, 106.84, the benefit of the doubt trend line or support level. Broke it. Went down. It was really just minor support. You can see a couple reactions in here, and that's where we bounced. We've been consolidating. This is the first consolidation where they're digesting the move down. Dip buyers are stepping in, and so bottom line is we need to pop down below that range, which I suspect we will. Go and hit my next targets here, and this is my current preferred swing target. Comes in like so many things. Price support 91 comes right in with the 200-day moving averages, so I still maintain at least that target for XHB. And if and when we start to approach it, I will most likely give you some additional targets, including any bounce targets if I think we're going to have a tradable bounce off that level. IAI, broker dealers, another one I threw out recently, and yep, you got it. Another bearish rising wedge, yellow lines right there, uptrend line off the low. Breakdown back test, I give you a measured target of the wedge, which would take us between T2 and T3. We already hit my first target, so it's already a successful trade. You could have booked profits there, but there's plenty more meat left on the bone. Like everything else, it's consolidating recently, along with the market, with this little bounce here. And so I'm looking for a break below T1. Even though we took out T1 once, I think the next break, because it's the bottom of this recent consolidation range, should open the door down to my next targets. And I favor, even though that's the measured target, I think we'll come down to T4. Here's the 200-day moving averages there. So plenty of meat left on the bone. And again, I'm doing this video because we're up today. We're up 1%, and we're at the top of this recent trading range. And so this is when I like to short. You don't, if you feel like shorting once this thing breaks down, you're down here, and you ask my opinion, I'm going to say I wouldn't. I'd be more apt to getting ready to cover down there. Again, you want to, if same thing works in reverse when you're bullish. And not many people do what I do. I like catching bottoms and tops. I'm in early, and sometimes you get cut, and that's what stops are for. If you try to catch a falling knife, on the downside. But again, I'd rather be a seller when most people are buying. If not for the sake of it being up, don't get me wrong. If we're at resistance and a case was made for a bigger move down. So this is, again, probably the last good shot we're going to get. If you miss this thing to begin with, you miss that initial leg down, then right here, and then boom, 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 boom. So let me quantify it for you. If I'm correct and it goes down to T4, that's another 8% drop. Next up, that's IEI, the broker deal. Oh, let's talk Carvana. Somebody asked about that. Sorry, guys, it dropped off my radar recently. This was based off the 60-minute chart right here. And so most recently, we had an entry here, I think, original off this top, or back here, and we hit T1. Then we hit it again, we bounced. We made a marginal new and still divergent high that didn't violate a 3-to-1 RR. That's usually what I'll use, a 3-to-1 risk-reward ratio. So in other words, if you short right here and you're going for a drop of 35%, then you can give yourself on that either at least a 12% stop loss, and that would be somewhere up here. The stock last time, or most recently, it hit T2 and he had positive divergence. That was a catalyst for this rally. Then we went on, took out the downtrend line. Again, it's just fallen off my radar. But as I said earlier today, you got to know, if you're trading individual stocks, it's imperative in earnings season, when they report, and more so, what's their history? Because I can look at stocks. If you look like an AT&T, I'm just making names up, Warner Brothers, something, Time Warner. some stocks have a very low, a history of very small moves after earnings, where others think Tesla, think Netflix, think Carvana. It's in the nature of their beast. Almost every quarter, they have huge gaps up or down. It's just due to their volatile, the way these stocks trade. Lower volume, high volatility, high beta, high gross, high short interest. And so that is this thing can go either way on earnings, and that's what it did. It went up today. If you want to know where it's going, this thing on the daily chart has a clear pattern, making these divergent highs, walking up, and then boom, big corrections, double-digit drops. That was a divergent high based on here. These are the divergences. The divergence got even bigger here, another big drop, and then more recently here, and that was the last short, and that was T2 hit there. And now this high here today is a marginal new and still divergent high. It's big, up 32%, but that's this is a stock that when it falls, it dropped here. The drop was 99%. Again, 99%. So anyone that bought it there, it's still way under. Bought it up here, it's still way underwater. And then it turned around and it's rallied, 3,000%, but it's still not even close to where it was. And that's where we're at right now. So far we'll see if and when this divergent high plays out for another drop. But right now that's what's in the charts on this daily. So I don't have much of a near-term opinion on it. MKTX, this one I highlighted recently. We've traded this many times over the years. Both long and short, mostly long trades, including back here, and then we turned around and shorted it there. I think that was the last one. We were also, I believe we were long there. Traded this one for many years and highlighted. The main thing, it's simple. I'm trying to share, get as many long trade ideas that I see that I like. This one, big positive divergence, divergent low, just like we had here. Off that divergent low, the stock rallied 50%. And so it's starting to move up. Remember, we're also long treasuries. They tend to do well when treasuries do well because it's a bond trading. They do electronic bond trading. We're coming up to the first target now. I'll give you a 211. In fact, we came close enough yesterday to effectively hit it. Yeah, so next target, if we can pop that. But as I said, I put this up here. Next earnings, May 7th. So that's coming up in just a few days, guys. Keep in mind, and then how to trade it. You can take it in earnings if you just study the chart, look at how they've done post earnings, look at their history of gaps and moves down, and then decide if you want to carry any into earnings or maybe a smaller position and wait till earnings out of the way. That's usually the best bet. All right, EATZ, that is the restaurant ETF. And I highlighted it here before it broke down with this beautiful bearish rising wedge breakdown. We hit T1, went slightly below it and bounced. That's it. So that's my first target hit, my expected reaction. And then next thing, I don't have a great resistance level, but I'll add one here. We're pretty much hit it the other day. And why did I put that line there? Well, first of all, it's right here. You had some support, and then that's a reaction high. And so this one, I believe the counter trend bounce is done. Should take us down to T2. What's up next? PEJ is a related ETF. This is the leisure and entertainment sector. Again, beautiful bearish rising wedge, complete with negative divergence. One of my favorite setups. Breakdown. We got the sell signal. I highlighted pre-breakdown. Hit T1, my first target, almost to the button. Bounced as expected. It's a counter trend bounce. So now we should be headed down to T2 unless Apple just mucks the whole thing up for us. ANF I threw out recently. I was covering a lot of, somebody had one or two members had brought this up back here and it was going parabolic, and I kind of joked like, did they invent the recipe for cold fusion here? This is ANF, Abercrombie and Fitch, a clothing retailer, and so I said wait till it breaks, and then it broke down, back tested, and it's been moving lower. Nothing big, but still a lot of downside left. Big divergent high, and it broke, back tested, and it's been stair stepping lower. And gosh, I think I only gave you one sold target. I think it'll come all the way back to that $49 level, but you got the 200 days there. There'll be some bounces along the way, but I don't really see a whole lot of support until down here. So if you're willing to Short it, throw away the key with your stop in place, the appropriate stop. Where's that? Depends on you. Earnings May 22nd up there. There's a downtrend line. You could have a tight stop somewhat above it, not right above it, maybe on a daily close, or your entry point if you shorted it, or a little bit above that. If you're going for a drop to 49, and you shorted either the breakdown or the back test, or basically, which is about where we are now, split the difference, 61% downside. So if you're targeting 61%, you can give yourself a 20% stop loss, but I don't see why. No need to let it even go that much. Give it just a little above the highs, and then you have an excellent RR, probably 5-to-1 or better risk-reward ratio. IBB. Somebody asked about that a little while back, and I brought it up, and it looked just like XRT. Big old trading range, another sector entrenched solidly in a bear market sector. Biotech's peaked back in 2021 and have grinded here. We had this little false breakdown with beautiful positive divergence to set up a nice long trade. Once you entered the range, as is so common case, you went to the top of the range. Once you went to the top of the range, what's next? Move down to the bottom. I think we even had some negative divergence there. I didn't have it drawn in. Really wasn't tracking it at the time. Somebody brought it up here for me. And then when it was here, we went and we broke out, and I made the same prediction. I said, yep, or actually I did it pre-breakout. I said, look, we go here. I gave an update here and said, look, if it breaks out, and I could see that happening, if it takes this trend line, there will be a false breakout, a failed breakout. You could even short that, betting it will fail because of the negative divergence and overbought conditions. And it did. And it fell back into the trading range. And as I said with the XRT, it won't go straight down, but the next stop will be the bottom of the range and then quite possibly down through it. So far, it's good for a, down to the recent low, about 12% drop. Again, nothing goes down forever. Got oversold. Dip buyers are going to do what they do when things get oversold. Shorts start to cover. Longs start to step in. I can't make a solid case to short. There's some minor resistance there, but when you're in a downtrend, just take rallies and scale back in however you want. If it got all the way back here, that'd be an even better short, about 134 and a quarter. It may not get there, but if it did, that would be another objective short entry. But nature of bear markets and even corrections, just corrections alone, are that it doesn't tend to let the longs out easily, or let the shorts in easily. If you didn't have the gumption to short when nobody wanted to short and everyone wanted to buy the breakout or right after it failed, then you get these little rallies back. Everybody, all the longs that took the breakout just wanted to get back close to where they were, but it usually won't make it. And same with short sellers. If you're eyeing 134.24, it'd be a perfect entry, as would another pushback to 139.50. But almost too easy. Sometimes you get easy. We got 433 on QQQ recently, so I didn't think it'd make it that easy. It was almost like the algos just took us right there. And so you got it. And it was, to me, I still view it as a gift. Maybe Apple will prove me wrong, blow us above 433 on QQQ. But as of now, that hasn't happened, and I don't think it's going to. But I will certainly react to it if it does. A, B, and B. This is Airbnb. And how did I do it? A, B, and B. Yeah, there we go. Airbnb. Another play on the leisure and recreation sector. You guys all know what Airbnb is. Even if you live outside the States, they're huge. Divergent high, breakdown, back test. And now we're at that 154.29 support. I won't even call it my first target because it's so close to the breakdown. You can call it that if you want, but we bounced off there, made a perfect back test. It's a support level I've had here, and you can see since the breakdown we've been testing it. And so it's really good support. So basically we just have to take out the recent lows, and that'll open a door to my next target, 140.117 plus the 200-day moving averages. Get a reaction off there, and if and when that level goes, next stop about 130 for Airbnb. Kara, I'll bring that up. I told you I had it, took it. We hit that. It had to clear the $1 resistance, which it couldn't. Tried on several intraday attempts and kept getting rejected. Then I held on to it, started selling it. I told you back then. I had a limit order hung there, sat there for most of the morning, and then boom, 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 they were taking the shares. got interesting, and then it just kind of, I just moved out. It was a capital burner too. I told you recently with QQQ before when we bounced up, that was pretty aggressively short. These penny stocks will just eat margin up in your account because they don't count, when their stocks are below $1. So I just pulled the plug on it. And it also took out the stop. It's just kind of dead money. It could still run. It often runs when the pot stocks run too. It's if I'm not mistaken, they have something to do with cannabis related drugs, and it's a biotech. But anyway, I just wanted to update it. I did see a comment, and I meant to cover that in a video for those that sub who asked. Oh, look at that nice little downtrend line. So there it goes. Yeah, so keep an eye. If the pot stocks keep getting some more traction since the government's plans to categorize it, change the category classification for marijuana, then or not. Oh, this thing could go on its own. There it is. It needs to break that level, but you still got to get back above $1. That's usually when stocks will rally. If you trade below $1 for too long, then you face delisting. So they do what they can to try to get it above. So there's your level. You can take it on that downtrend line. You might even have an uptrend line in which to use a stop loss below right there that I just created. So you get that little triangle pattern. And so, hey, still a maybe. I might circle back to this one again if it can pop that level. Oh, that reminds me. Let me set a price alert. There we go. That'll remind me when it does, if I take it off my radar. All right, TJ Maxx, retailer earnings May 15th. What more to say? I've already covered it. Breakdown. Well, maybe it was before it broke down, but there's your sell signal. Breakdown, hit the 200s or close enough to my first target, 91.43, bounce, and I still maintain these additional targets. I think the retail sector has clearly topped and has a lot more downside left in it. GBTC, Bitcoin, has broken that trend line, appears to be headed lower. Bitcoin, you can look at this chart here. This is BTC. This is the actual crypto. I had this uptrend line here, divergent high recently, and I highlighted this as a short trade. If we broke the trend line, it did. It went down, put in a divergent low there, rallied, and then rejected right at the downtrend line. So this was all on the previous. I haven't updated in a while, but perfect rejection off the downtrend line, walking lower. I don't have a strong opinion. In fact, if anything, it looks like it might bounce soon. Yeah, you've got nice positive divergence, and so we are below that trend line I gave you on GBTC, but there's a divergent low. I wish I saw better support right here. I see decent. This is a line. I've had that line there. I didn't just add it recently. It was on the last chart I would have shared with you a few weeks back here. We could continue down here. We could burn through the divergence. All I can tell you is I wish there was a downtrend line to make a objective long entry on. You could take it here. You just have to keep your stops relatively tight because the price action, this one's been trending down. It really peaked back here, you can see. And you can see lower lows. I'm sorry, lower highs and lower lows. And that is, my friends, what we call a downtrend. And that's coming off a larger uptrend. So maybe just a corrective wave. If you want any more updates or you want Ether, let me know. I've just kind of dropped Ether off my radar. I've been watching this one a little bit here and there, and had a trade on it before. I'm in no position right now. Although I'm, might look at it. I'll dig into some additional charts and time frames and see if it's worth maybe taking along. All right, what's next? That was covered TJ. That was Bitcoin. Oh, let's do NVIDIA. We're almost done, guys. 4 more. NVIDIA. Remember, May 22nd, so we've got a little time left. Downtrend line continues to get rejected at. It's flirting with that 840 level, going above, below. But like I said, if you have to squint, give it the benefit of the doubt. So what I saw is a breakdown and a back test so far and a failure at the downtrend line. I still think this one likely topped with this bearish engulfing candle back here. And then the breakdown below the trading range. Only time will tell. And I think Apple, you got a couple weeks before earnings, so Apple will probably, determine where this one goes just due to inflows or outflows of QQQ if Apple rallies or dumps after earnings. Partner in crime, SMCI, they reported last night. or night before, and they got knocked down. It was also, it's a, an active short trade. We have a downtrend line there. First short was right here, that high, and then I mentioned this one here again, an additional short. Then recently we went here, took out that downtrend line, the price support, that triangle pattern, bounced back up, rejected at the trend line, post-earnings sell-off, and we remain here, and we just need to take out 690 to open the door to this sole price target I've given you of 355.60 or so. And then longer term, I think when you look at the weekly chart, we'll probably come on down to this trend line here. This looks indicative of a buying climax, blow off top, like I covered earlier in one of the videos today. SMCI. TLT I already covered. That's mostly it. I remember, back getting bullish on the miners back here, and my favorite of the silver miners was WPM right there off that level. We bought it long off 38.42, went up, ripped, hit all 5 of my targets right there, and then just kept going. But I wanted to highlight it because when I looked at it today, what I see here, you've got some divergence forming. You've made it ever so slight punch. We're actually back on it. 52.59 is the level I had. That's these 2 major reaction highs. There's actually 2 distinct ones right there, so 3 total. And we're there. So it's really this big kind of this trading range here. You had a little brief stint below it there and a little brief stint above it there. But major resistance, overbought, and probably, like I said, I did gold and silver, or gold up for you earlier today, and I just think, like I said, probably more downside to maybe dead money for a little while, and I don't know if you, I'll tell you right now, yeah, there it is. It could be a short, absolutely. It's a nice clean trend line. We're right on it. There's a 60-minute rising wedge, negative divergence. And so I may, after being long that one off the lows, I wish I'd milked the whole thing up. I milked a good part of it. But now it's time for a correction. So needs to break that trend line. Where to? Yeah, minimum right here. Got a little support. They're going to try to buy it, back test of the breakout. But if we get a deeper correction, which I think is a pretty decent chance in the miners, 46. This guy moves a lot. I've traded WPM a lot over the years. And a lot of these silver miners, they really tend to run. So that'd be about a 13.5% drop to 46. So that's a potential swing target with your first 2 targets right there, 51.30 and then 49.76. Okay, I am going to wrap it up here. It's a lot of stocks, and I did all that in just 42 minutes. Well, now 43. This has been Randy Finney with Right Side of the Chart. Have a great day.